Welcome to Findependence Journey. In this video, I'm going to talk about why I'm investing in SoFi stock. We're going to take a look at its business, financials, and the stock price. SoFi Technologies is an online personal finance company based in San Francisco. SoFi provides a suite of financial products that includes student loan refinancing, mortgages, personal loans, credit card, investing, and banking through both their mobile app and desktop interfaces. I believe it's one of the most promising fintech companies. SoFi was founded in 2011 by Stanford graduates with the purpose of providing affordable loans for students. Stanford ran the first SoFi program with $2 million raised from 40 alumni and dispersed to 85 students at lower rates than the commercial market. The program was very successful, and the next year it was expanded to 40 universities. This innovative way of providing affordable loans is well represented in SoFi's name, which is short for social finance. As the company grew and added more products, SoFi raised lots of capital from external investors, including Peter Thiel and SoftBank. CEO of SoFi is Anthony Noto. He joined SoFi in 2018 after the former CEO, Mark Cagney, resigned. Anthony Noto is a star CEO who was previously COO of Twitter, the co-head of global TMT investment at Goldman Sachs, and CFO of National Football League. Now we know SoFi is in good hands. As I've mentioned earlier, SoFi provides various products. A customer can do basically everything related to personal finance in one app. Cryptocurrency trading, which is getting more popular, is also available in SoFi. This convenience appeals to customers, especially young customers who are familiar with mobile devices. And as the number of customers grow, SoFi's profit will also grow. SoFi values relationship with customers and calls its customers members. Its goal is to build a lifetime relationship with members and sell them more products. SoFi is not making large profits on one product, but additional products sold generate profit with almost zero marketing cost. In 2020, SoFi acquired Galileo, a banking tech firm. Galileo powers a range of financial upstarts with tech and legal operations. SoFi CEO Anthony Nano said the acquisition would enable a broader ecosystem of companies to join SoFi. The acquisition is expected to give SoFi leverage over competitors like Robinhood and Chime because they depend on Galileo for day-to-day operations such as account setup, funding, direct deposit, and bill pay. What's interesting is that SoFi plans to operate Galileo as Amazon does AWS. AWS is a cloud service operated by Amazon and used by many of its competitors. Galileo will be a fintech service operated by SoFi and used by competitors. As AWS brings in huge profit to Amazon, I expect Galileo will do the same for SoFi. In March 2021, SoFi announced that it signed an agreement to acquire Golden Pacific Bancorp. The acquisition is a strategic step in SoFi's path to obtaining a national bank charter. A national bank charter will allow SoFi to accept deposits and make loans that use SoFi's member deposits versus the higher cost of funding for its loan offerings as a non-bank, creating greater efficiency and enabling the company to offer more choices and compelling value to its customers. There's something to keep in mind regarding the acquisition. A director of Golden Pacific Bancorp sued the bank, alleging that the merger was illegal. The director is seeking to block the acquisition if voting shares were not lawfully obtained. The bank's chairman says that there is no basis for the accusation. I'm not too concerned about this lawsuit, and I don't think the acquisition will be blocked. The actual reason of this lawsuit seems that the director is not happy with the price he was offered for his shares. Probably the most likely outcome is that the lawsuit is settled and the acquisition goes through. Now let's take a look at SoFi's financials. SoFi is showing strong growth. The number of its members keeps increasing, and year-over-year growth is accelerating for 8 consecutive quarters. The number of products also continues increasing. Again, year-over-year growth is accelerating. Impressively, year-over-year growth in Q2 2021 was 123%. Annual performance shows last 12 months adjusted net revenue of $852 million and adjusted EBITDA of $60 million. Both revenue and earnings are increasing, and it's almost certain that SoFi will report a positive annual EBITDA at the end of 2021, marking the first profitable year. I think SoFi stock will attract more investors with the positive EBITDA. Let's take a look at the stock price now. SoFi became a publicly traded company on June 1st, 2021 by merging with a SPAC, ticker symbol IPOE, backed by Chamath Palihapitiya. SoFi is listed in NASDAQ. On June 28th, the early lockup expiration was triggered for 83% of available shares, and the stock price declined through July. On August 12th, SoFi reported earnings which missed analysts' expectation. The stock price gapped down the next day, and that is when I bought SoFi shares because I thought the market overreacted. Currently, the price is up about 30% from that entry. The analyst rating for SoFi is strong buy. The average 12-month price target is $24.58, showing 22% upside. SoFi provides convenient and affordable financial services to its members. The number of its members is increasing. Its revenue and earnings are both growing. The company is expanding its ecosystem. Those are the reasons why I like SoFi and invest in SoFi stock. If you have enjoyed this video, please help this channel grow by clicking the like button, leaving a comment, and subscribing to the channel. I'd really appreciate your support. I also recommend checking out my other videos that may interest you. Thank you for watching.